Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets. New York coffee. 15 weeks ago, I had a look at the longer term charts here, and this is what I saw, and I quote, "The key move here was over the 50% Fibonacci line of the 2011-2019 move at 198.30. This has seemingly validated the action since September 2022 to date as a possible double bottom, Adam and Eve type. Thus, potential targets for such a pattern topside will be a primary target X1 in the 235 even area, the secondary hard to reach target X2 up in the 251.60 area. These are early days, but that is what it looks like right now." End of quote. Well, prices reached the primary target in the 235 area in mid-April, and a secondary hard to reach target in early July. The construction of the market that led to the move higher started in between mid-March to early May with the construction of the dark blue highlighted bullish shift pitchfork. The market is right now in between the overhead middle time, currently at 244 even, and the lower time, currently at 214.65. This pitchfork shows the bullish angle of attack, though interestingly neither of the outer tines, that's the lower tine or the upper tine, have been touched, with the market satisfying itself by gyrating around the middle tine. The next pattern was the mid-May small double bottom pattern that's really started to move higher. The ambition of this pattern was quite limited, and the topside targets, both primary and secondary, were achieved within the month of May. The next feature to note is the pink highlighted April to date broken downtrend, currently at 231.95. This only became relevant during the month of June, when it effectively capped the market. I originally thought that this downtrend, along with the lower time, might make a large sideways triangle, but in the end it only managed to create a small sideways triangle with the bright red mid-June to date uptrend, currently at 223.5. The break higher in mid-July swiftly achieved both the primary and secondary targets for the pattern, halting at the October 2011 high at 255.05. Prices have since headed lower again through the congestion between 241.05 to 243.40 and into a stratified series of congestions at 220.90, between 223.70 and 226.45 and 229.15 to 230.10. Since the end of May and early June, the bright red uptrend has also become potentially part of another pattern, along with a bright red trend line topside. This might be this possible bright red highlighted expanding wedge pattern, which is currently 223.5 to 263.60. At the moment, this is just a possibility, but it is worth exploring over the next few weeks, especially if the bright red uptrend holds. Otherwise, we'll have to have something else. London coffee. Prices made a peak in late April and a low in early May. So maybe, around about that sort of time, and late April, early May. That set up the opportunity for me to draw 6 weeks ago a pattern that has dominated this market until late last week. A bullish Andrews pitchfork for the late February, early May action, highlighted in dark blue on my daily chart. I said 4 weeks ago, and I quote, "I suggest this bullish Andrews pitchfork is key to this market, especially the lower time, currently at 43.51, with the nearby green short medium moving average, currently 41.31, and possibly the 50% Fibonacci of the April to May move at 38.28. You see, if we connect the recent highs, we have a bright red trend line. That's currently at 44.60. And together, this trend line and the lower Andrews pitchfork may make one of possibly two patterns. An April to date possible coupled with handle pattern, or the one I currently favor, an April to date possible ascending triangle pattern." And that's the end of the quote. In early July, the market broke above the bright red upper trend line, but prices failed to exploit the move up, as it was and became a false break higher. Last week we changed gap to lower, below the dark blue lower time, and today we are trying down below the green highlighted rising short medium moving average. So far it has elements of a break lower, but as we have advanced so far along this ascending triangle, almost to the apex, the chances of yet another false break are very high indeed. Thus for now, I will defer setting any targets below, but instead keep a close eye on what this market is doing around the lower time and the green short medium moving average. There is one other feature that I draw your attention to, and one that will have a fairly swift resolution this week. We are set up right now for a possible monthly key reversal here for the month of July. Thus if prices should close on Wednesday the 31st of July, either over 40.11 or under 39.87, then we'd be on. Right now we are most definitely looking at a monthly key reversal up, and that needs to be included in any calculations and probabilities relating to the ascending triangle pattern. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.